He took the ring off his finger as he walked in the room, and he found in some stranger and promised her the moon. How many lies son you must have told? You think you're a rich man with your pocket full of gold. For another man's treasure, he'll say anything, but his one night of pleasure worth the trouble she'll bring. Son, don't look so surprised, 'cause I should know I once was a rich man with my pocket full of gold. All right, let's see. Only 50 people so far. I want to quickly go over this while people join. Ham called me, I called him. We're in phone tag mode, but I just want to quickly go over this, and then we can refer to it later. But this is Mike Maloney's gold-silver ratio, and it takes his emotion. I'll read what he says. His gold site is one of the ones I highly recommend. It's called goldsilver.com. I highly recommend goldsilver.com when you're buying gold and silver. So I guess one question is, what is the gold-silver ratio? Well, it's pretty simple. You take the price of gold, you divide it by the price of silver. So the ratio is 1 ounce of gold is equivalent to how many ounces of silver? Put another way, 1 ounce of gold buys how many ounces of silver? And this chart is intended to give you a guide for when one is underpriced to the other. My opinion is he's being way too conservative. I think gold to silver ratio will go under 20, under 15, under 10. But let's go with this right now, because that would be a paradigm shift. That would be a paradigm shift. So when the gold-silver ratio is under 50, this chart, which I made this chart, it suggests gold is undervalued compared to silver. So Mike buys only gold. When the ratio is between 50 and 60, Mike buys 70% of his real money, his real asset. He spends his fiat currency. he buys 75% gold and 25% silver. When the ratio is between 60 and 70, so 1 ounce of gold buys between 60 and 70 ounces of silver, Mike splits his buys 50-50. When the ratio is between 70 and 80, 75% of his fiat currency goes to silver and 25% to gold. And when the gold-silver ratio is over 80, Mike Maloney buys only silver. And let me just read what he says. I'll read the whole paragraph. During the COVID crash, I, Mike Maloney, wanted to buy gold so bad, but I couldn't let myself. I've learned that buying or selling based on emotion, I second that emotion, is the worst thing I can do. By strictly adhering to the commands given to me by the gold-silver ratio, I was able to buy silver when it was trading at less than 1/100th of gold's value. I believe wholeheartedly, that's Mike Maloney, that one day you will see the gold-silver ratio fall below 20. If I sell at that point, then my silver will have outperformed gold by a factor of 5. If I decide at that point to swap my silver for gold, I will get 5 times more gold than I paid for. So that is the trick of this chart. He's trying to take the same amount of fiat currency, and ultimately, as these ratios come closer together, you can swap your silver for gold and end up with more gold than you could buy right now. And obviously that will apply to any asset out there, be it homes, multi-unit apartments, apple orchards, dairy farms, a collection of Matisse paintings, anything. Okay, let's skip out of that. I just got to get out of there. I know I torture you guys by trying to get information in your head. So I don't want to overload you on any one particular time. But right now, today, if one goes to goldprice.com or goldprice.org, I guess it says, gold is trading at 28.46. It's funny, in dollar performance, it's down today, but over the last 30 days, it's up 3%. Over the last 6 months, it's up 14%. Over the last year, gold is up 41%. Over a 5-year period, gold is up 81%. And over 20 years happens, I know, gold is up 565%. All right, this is not what I want. I want goldprice.com. Maybe that's not a thing. That might not be a thing. All right. All right, you guys. All right, so gold is 2846. 2846 right now. 2846.53. Let's be exact because, you know, why not? In US dollars. Darn it. Sorry, my service is very slow. Okay, connection timed out. What happened? I have no idea. Okay. And silver is 3105. So what you do is you take, obviously, I know I'm not talking to an audience of children. I don't mean to be insulting. I'm just, what else am I going to say? So you take the price of 1 ounce of gold, 2846.53, and you divide it by the price of silver, 31.05. And right now, 1 ounce of gold buys 91.675 ounces of silver. So you go to this chart that I just gave you, and you look at it and you say, well, that ratio, that's the gold silver ratio, stands for today at 91.6. That's over 80. So if you have new money to commit to precious metals, according to Mike Maloney of goldsilver.com, a gentleman of whom I can only give my highest recommendation. I think he's tremendous. I've never met him, but I've followed him for a long time. Anyway, so at 91.67 gold silver ratio, if you have new money, silver's your man, silver's your girl. So there we go. Let's get back to comments. See, updates. God, updates. Yeah, all right, let's go on updates. GTII J-Town is in receivership. Apparently, today, there's a ruling before the judge. I have no idea what happened. You probably can look it up. But the place to get that information most clearly is not legal advice. Richard Hoffman, an attorney, not an investment banker, not a venture capitalist, an attorney, and JR will give you a detailed analysis of what's going on with GTII. The issue before them is whether or not, as I understand it, let me make that clear. I'm not claiming to be an expert. The issue before them is whether or not this company that has come forward, AIversity, should be absorbed into GTII in the form of a reverse merger. And obviously, since you are so passionate that you come on here, you are aware that you can get that information from not legal advice. Now, I've gone over many times and continue to feel badly for having to point out that GTII went from 9 cents to $9. And it now trades on what is called the expert market. Now, many people took profits in GTII. I did not. because I believed that what we were seeing was a short squeeze, and I believe GTII was in the middle of a short squeeze. The Three Musketeers came in and got everyone to chase COSM to great detriment, but it popped the bubble of the squeeze at that time. That's my assessment. I think in that process of that bubble popping, the CEO, David Reichman, decided to try to claim the goodies that he had started counting on. And apparently, according to what I understand has been filed, there were a lot of missteps made. So the company is in receivership. Now, you, J-Town, because you're a wise, attentive investor and you're not a shill here, you know that GTII is a shell company. Now, it may not be called a shell company for purposes of legal reasoning because they own a tiny eyeglass company. They own a tiny gold company. These may keep the definition of GTII from being a shell company. It may be an operating company. I do not claim to know the legal distinction there. But as a practical purpose, from a financial markets standpoint, GTII is nothing but a shell company. What is a shell company? A shell company is a company either created for or having become the result of life, existence, as a public company. A shell company is a public company which has no assets. Typically, a shell company has a slate or at least one officer. It has a slate of, or at least one board member who could be the same person. Typically, a shell company has some shareholders. Typically, a shell company, if it is clean and desirable, is current in its financials, current in its filings, and has a spotless standing with the state that it's domiciled in, and the regulators, I guess that would be called statewide, not locally, but they're local regulators and the national regulators. That is a shell company. What is a shell company worth? There are, under the regime of Adina Friedman, there are hundreds, if not thousands, of companies destroyed by Adina Friedman's NASDAQ markets. Not because investors are stupid. I think it's hard to argue that it's the CEOs on 1,000 companies. How could all the CEOs of 1,000 companies who made the qualifications to get onto Adina Friedman's markets How could they all be pieces of crap and shit and detritus and flotsam? No, no. Make no mistake about it. Adena Friedman has created a toxic environment because she is either incompetent or complicit, which destroys companies who come on NASDAQ, destroys cities and tax bases and workers' careers and livelihoods, and destroys investors. That is Adena Friedman's legacy. She wants you to believe her legacy is that she's one of the most powerful women on Wall Street because of her vagina, she got the job. She didn't get it because she has integrity, courage, or care. And she is indifferent to the slaughterhouse her marketplace is. She's indifferent. She is no better than Nero, who reportedly, although there's some debate, played the fiddle while Rome burned. So what is a shell? Shells are companies which can be purpose-built, or they can be the residual of a public company. Mostly shells end up on the over-the-counter market. Occasionally, there's a NASDAQ shell. For some reason, people want to get on her marketplace. And occasionally, there's a New York Stock Exchange shell. And there's this vague thing called I forget now what it is, NASDAQ International or there's another couple of names for exchanges, but in the very simplest case, there's the over-the-counter market, NASDAQ, and New York Stock Exchange. They're all cross-owned. It's just all names at this point. Now, what happens on NASDAQ is a lot of these shells get delisted, which is a strange business model that Adena Friedman has. Her business model is to encourage companies to join NASDAQ, allow them to be shorted into oblivion by bad actors, including hedge funds, including her backers in the banks, the big funds. She allows the destruction of her own clientele, the corporations on NASDAQ, and then she dismisses them, she banishes them. It's one of the oddest business models I've ever seen. But she's a woman. And her priority is getting, before she destroys those allows her marketplace to destroy those companies, she wants women on the board. Again, a very strange set of priorities. Odd. I can't even begin to comprehend it. And I don't know why it's allowed to occur. So what happens is that when a shell comes available on the New York Stock Exchange or the NASDAQ, they're rare. They have, in my opinion, a shine, a panache, a value, which is left over from a time when the NASDAQ really was a good market, left over from a time before the sloppiness, the incompetence, and the indifference of Adena Friedman. So if someone runs a private company or someone has an idea for a company with money and investors and wants to go public in the United States of America, they may want to go public on the New York Stock Exchange or NASDAQ. Now, when you're a small company, there are, contrary to the lying of Gary Gensler, or again, the incompetence of Gary Gensler, the indifference of Gary Gensler, the US markets are not a source of capital formation for these smaller companies at all. So there are no investment banks. There is no smooth IPO process to guide these companies. So what they do, they jumpstart it by getting on the market themselves. The premium shell companies are NASDAQ shells for some reason and New York Stock Exchange. How much are those worth? I have seen NASDAQ shells sell for, reportedly, I haven't been involved in it, but I've seen the quotes, anywhere from, to my memory, $600,000 to $6 million and higher. And higher. They're rare. Most of the time, the shells available are over the counter. Now, over the counter has various stratations. They have the pink sheets, the almost gone, and the OTC QB, sorry. What are those worth? Well, J-Town, they're worth basically $500,000 or less. Now, the value of an over-the-counter shell can be enhanced by the currentness, how current the shell is in all its filings, how clean the shell is in all of its interactions with the SEC and the state, how many shareholders that shell has, because the more shareholders you have, the easier it is to, for some reason, everyone wants to sleep with Adina Friedman. And the assets that that shell has. And is the shell unembroiled, not embroiled in legal controversy? These are among the things that make shells attractive or unattractive. Another thing is what state, which state? What are the legacy assets? But those are some of those things. So GTII currently, and I can't tell you how appreciative I am of this question, that you can take the time, your time, out of your busy day to bring this urgent question in sense of timing, and this meaningful question in terms of trading, and this question which can allow this audience the potential to make some amount of money or lose money, but to make their decision about that. I can't tell you how appreciative I am that you could bring forth this question as a priority. Makes me very proud that I get on live and spend time discussing issues that make people, I hope, more aware and better trained and perhaps more confident in investing in the American stock markets. For you to bring this forward shows me that you care about your investments and you followed GTI closely. I know you're a busy person and you do not have the ability to Google and learn some of these things on your own. So I just can't tell you how happy that I am to have this opportunity to go through this question yet again. So GTII as a shell is delinquent on its SEC reporting. So that doesn't make it very valuable. It does have a company verified profile, which that's a positive. The transfer agent is good. That's a positive. But obviously it has shell risk. The company has a market cap of 13,500. Is that a legitimate market cap? Is that one that will stand the test of examination? I don't care to comment negatively, but the stock trades on what is called the expert market, which is the highest risk of fleecing, stealing, manipulation, lying of any publicly traded company, in my judgment. Why? Because you cannot know what the true bid and ask is. You don't have a right to know it. You cannot know if you pay 7 cents that the bid isn't 0.000007. That, my friend, is a dangerous, dishonest market. But what it is, it becomes a place with that Orwellian name. It becomes a place where the funds, the fronts, the lawyers, the prime brokers, and the offshore partners of the men who destroy companies, it becomes a mechanism in bankruptcy and, in my opinion, in receivership, but we'll find out if I'm right. I don't claim to be an attorney. Whereby criminal sales of hundreds of millions of shares can be cleansed and evaporated and eliminated and crossed through the legal system at less than a penny a share. Many steps below a penny a share, all because the lawyer, who we all know lawyers are honest, lawyers are only trying to do the right thing. The lawyer can go to the judge and say, Your Honor, the most recent quote on the expert market, and the judge has no idea what he's talking about, but she thinks, oh, expert market. Sounds good. What's the latest quote? Well, the latest quote is 0.00007. But we are willing to settle this, Your Honor, and cross this, Your Honor, at a penny, which is whatever, 500% higher than the last quote. 1,000% higher. But we believe, Your Honor, and I, as an honest attorney who only strive to behave in the best interests of American investors, we think we should pay more, and we're going to pay a penny. Done. Cross it, done, boom. Guess what? The problem's gone for the shorts. That's what the expert market's all about, in my judgment. It's a big curtain behind which the crime occurs. But hey, it's got a good name, expert market. All right, so then, so we have ostensibly a market cap of 13.5 million. Well, I've just spent quite a bit of time telling you that the quote that this calculation is based on is completely a fraud. It's a quote taken out of an expert market where there is not a meeting of buyers and sellers. There is just criminal manipulation. So, whilst the market cap shows 13.5 million, it is highly, highly unreliable, that figure. But anyway, there's 750 million authorized shares. That's probably a little high to get a high valuation for the shell, but it's, you know, that's what's out there. The outstanding shares currently are 339 million on GTII. They have restricted shares of 200 million and unrestricted shares of 142 million. The DTC holds 112 million, and the float is 98 million shares. I don't know what this share structure would garner in a valuation of this shell. But if I were a buyer, I wouldn't like it. But it's not as bad as I've seen. But I think it's too many shares and too much. So what are my choices if I purchase this shell? One of my choices is to do a reverse split. What is the likelihood of a reverse split if a company does come in to GTII? My opinion, anyone that buys this company is going to try to get on NASDAQ, which means it has to be over $1. So there will be a reverse split. Offsetting my opinion is that AIversity, and of course you know this because you care about your account and clearly you spend time studying it, keeping up to date with not legal advice, doing your own research. But this new CEO of AIversity, it is my understanding, I have no opinion, but it's my understanding from listening to others, that he is willing to delay any reverse split for a year. My opinion of that is a distinction with no difference. When you have an industrial scale criminal organization, in this case, the Kramer brothers, Alpine, their investors, and probably the regulators, the broker-dealers, the prime brokers, they can wait a year. You can't, but they can wait a year. So if they know that the company is going to possibly reverse split, guess what? In my opinion, they'll make sure they do. They will sell stock into oblivion. Now, it's further my understanding that this new CEO has the backing of deep-pocketed wealthy investors. My experience is that doesn't matter. Doesn't matter a thing. To you and I, to see someone with 50 million, 100 million, $1 billion, wow. But they only have a certain amount of money to allocate to something like this. And just like they put their pants on one leg at a time, they can only invest what they have. The criminals who are encouraged by Adina Friedman can sell one time if they own something. They can sell a second time if they borrow it. They can sell a third time if they just sell it without locating it. They can sell it a fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th, 13th, 14th, 15th, 16th, 17th, 18th, 19th, 20th, 21st, 22nd, 23rd, 24th, 25th, 26th, 27th, 28th, 29th, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 100, 150, 200, 250 times, 1,000 times. They can sell, and they will, in my opinion. But on this reed of hope, let us assume the new CEO will come in and he will not do a reverse split. He will not do a toxic financing. And let's assume that the whales capitalize the new company. Well, to get on the NASDAQ, to my memory, you can look it up. I'll give you that homework. You have to have 400 shareholders. It might be higher. But in the case of GTII, as of September 30, 2024, as a shell, GTII has beneficial shareholders of 787. So they meet the threshold to become a NASDAQ company, which is the reason that's the goal of all companies. So how is GTII going to get on the NASDAQ if it doesn't do a reverse split? I think it's impossible. I think it's impossible, or as close to impossible to be practically impossible. But let's try to figure out how they can do it without doing a reverse split. Now, Ham is calling in. He wants to talk to everybody about stocks that it might be on the verge of explosive short squeeze. But J-Town, I'm going to finish this discussion of this completely dead stock. So there's 787 beneficial shareholders. That checks the box. But the stock isn't $1 or better for a number of days or months. How do you get this stock there? There's currently 339 million shares outstanding. Let's assume that the receiver, not the judge, let's assume the receiver claws back by the time he gets to Phoenix, let's say he claws back 39 million, leaving 300 million shares outstanding. Okay, J-Town. What is the update in that case for GTII that I think is very urgent? Very urgent. And we better discuss it right now. We better know it right now, and we better focus on it today. So there's 300 million shares of GTII right now. The stock, for some reason, is quoted at 4 cents. So let's use that. Nobody knows if that's what the bid is, but it's 4 cents. So using that, the company has a market cap of 12 million. Let us assume, for the sake of this argument, that that's an accurate value of GTII. We will, for purposes of this discussion, ignore that it's embroiled in legal battles. We will ignore that there's a large short, motivated short, who is filing objections. We will ignore that the CEO hasn't agreed to anything. We'll ignore this guy Rhubarb. We'll just assume all those problems aren't going to be there and it's clean. Okay. So AIversity is going to come into here. They have to cover their legal costs. The whales who were sponsoring this have to cover the costs of this receivership and other costs. Well, I don't know what to, let's assume all of that is zero. So we're going to assume that we as shareholders, and I am a shareholder of GTII, own a company worth 12 million, and it's free and clear of liabilities. It has no legal risk. There are no risks. It's pristine. Now, AIversity could go buy a competing over-the-counter shell who has no assets or very few, and they could own 99% of that shell, maybe for 100 grand. Maybe they pay 250 grand for the trouble of the person that put it together, and they end up with 95% of that company, or 97.5%. Here, AIversity is given the opportunity to come into a company that, whilst I just said we'll dismiss it, I have to observe that it's not completely friction-free. So what's the difference? Why would AIversity like GTII? I can only think of 3 reasons. It has 787 shareholders. It has whales as investors. And they may perceive that they can cause a short squeeze and raise money. Those are the only 3 reasons I can think of as compared to something else. All right. So how much are they going to pay for GTII, in your opinion? Yeah, I can't talk to you. Let's assume they pay $500,000 in cash, which they don't have. But let's assume they pay $500,000 in cash for GTII. What is the value today of AIversity? I don't know the answer. What is the value today of AIversity? Apparently, it's a company who has a Bloomberg-like terminal. It has an app that helps investors, and it already has revenue, and it has a tremendous business plan, a great CEO. So I'm going to assume they're going to come in saying the company's worth 100 million. Maybe they're saying it's worth 50 million. Maybe they're saying it's worth 200 million. Who's going to argue? It doesn't really matter. All that is for marketing purposes. What matters is, what is AIversity worth as it comes into GTII? I would argue AIversity is worth whatever they want to say it is. How does that translate to the deal of the reverse split? Best case that I can imagine is they pay us $500,000 for the show. Best case. They give us 15% of the newly organized company. 15%. You could argue with me, but I don't have time to go through the other alternatives. So I think AIversity will be worth 85% of NewCo, which is our GTII, will have 15%. Now, right now, the market supposedly is valuing your investment at 4 cents a share. Out of the gate, in my opinion, that 4 cents a share will be worth, even if it's correct, will be worth $0.006 cents a share, 0.006. But I hope that maybe they offer us 25% of NewCo, or maybe they offer us 50%. I don't know why they would. But if they do, maybe that number out of the gate is much, much higher. But to be clear, in any scenario I can see, after all of this importance of an update on GTII, urgent that you need to come on here and ask for it, I cannot come up in my head. You ask me, I'm giving you my answer. Where your shares or my shares out of the gate are going to be worth more than half a penny. Now, it's very important to talk about that. Very important to get that update across. Very important to pay attention. And I'm tempted to turn this machine off because of the importance of the GTII update. Your shares are worthless. Anything that anybody discusses is a waste of your time, in my opinion. I think Richard Hoffman is doing a terrific job with what he knows, which is the law. I don't know the law. I'm not sure he's I don't think he's a securities attorney, but I think once you're an attorney, you can figure it out. And I think he's dedicated himself to know what he's talking about here. So what are the three reasons that the CEO would come in? One is that there's 800 shareholders, which could get them on the NASDAQ, but we've already written off the idea that he's going to do a reverse merger, so he's not going on the NASDAQ in this example. The other thing we know is there's whales. There's us, there's we, the 800, and there's whales. So the new CEO could come to us as a captive audience for new capital. That's valuable. We're highly motivated. We're idiots because we actually think there's some value here for us. But that's valuable to the CEO. And then there's the short position of shares that in our illusion, in our shock, in our denial, we still give value to that short position. We don't give credence to the power of whoever is backing the Kramers, whoever the Kramers' clients are, whichever attorneys gave Nadich, their attorney, the documents. We don't give any credence to the power of Alpine. We don't give any credence to the power of the Hurries. We don't give any credence to their attorneys, who include Gibson Dunn, who manipulate the system and buy time and drive our shares into the briar patch. We don't give any credence to that. That time has gone by, shares have gone offshore, the shares have disappeared, transactions have disappeared. We give no credence to any of that because a bunch of lawyers are going to save our financial ass. Well, I'm here to tell you that's not how it works on Wall Street. Lawyers will get the answers. Lawyers will get a settlement. Lawyers will make sure their creditors are paid. At the end of the day, at some point, there will be a settlement offered, and the lawyers will recommend that the settlement's done. But this is receivership. I don't know all the mechanics of it. I do believe that receivership poses a massive risk to shareholders. But let's go back to those three things that the CEO of Aversity, for some reason, wants to get the GTII show. One is the 800 shareholders that are motivated. That's us. Two is the whales. It's a pretty good reason. It's a pretty good reason. It's not for the current management team. It's not for the name. It's not for the location. Okay, it's those two. And it's for the short position. All right. I don't have an answer, nor do I think the lawyers have an answer, nor do I think anyone can have an answer as to how viable the strategy is after receivership, after all this time, after all this destruction. I do not begin to have an answer for you as to how viable a short squeeze is. My opinion, zero. Why? Because this receivership is what the Hurries, Scottsdale, Alpine, the Kramers, their clients, NSCC, DTCC, it's where they want the stock. Why do they want it here? To solve the problem of a potential short squeeze to the system. That's my opinion. And that's my update on that issue. The second thing is we've already admitted for purposes of our fantasy that the new CEO is not going to reverse split the stock. releasing tens, if not hundreds of millions of dollars to the criminals, which is their strategy. So we'll just go on with that fantasy. How can the NewCo get to $1? Well, obviously AIversity comes in, and its business plan has such a massive growth potential that it takes the company from 4 cents a share, which I think is a bogus quote, to $1 based on growth, based on performance. We are talking the next Amazon. We are talking the next NVIDIA. We are talking the next Tesla. We're talking the next Netscape. We will be expecting this management team to come out of the gate and give initial returns. Probably we're going to demand it within a year or two, of getting the stock to go up 25 times, 25x. And that's what AIversity is. It's a Bloomberg type terminal. It uses AI. They have online customers, they have revenue, and they should be able to take this company from a $12 million potential starting gate valuation, maybe higher, to 300 million quickly. That's our fantasy. Is it reasonable? I don't know. I haven't seen the business plan. Okay. So what is the CEO really buying here by going through this? I would suspect, number one, somebody is sponsoring and paying for the cost of going through this receivership, the lawyers and all that. So the CEO saying, what the heck? I'll go along with it. So really, it boils down to one thing the CEO is buying. That is our ability, including the whales, to fund the NewCo. Okay. So I think in a very generous example, NewCo will be called AIversity. AIV will have 85%. GTII, us, will have 15%. Now, we want the company to grow. If the company doesn't have capital with which to grow, if it's not growing out of revenues, which if they want to accelerate their growth, maybe they can't. But I don't know. Maybe their revenues are all ready to happen and they don't need capital. That would be perfect. But if they need capital, they're going to come to us and they're going to come to the whales. If you don't put up capital, it doesn't matter how you look at it. If that 100% accepts new money at 4 cents a share, at 10 cents a share, at 20 cents a share, and it's meaningful capital, that's going to decrease the ownership that the original AI investor has. In my example, we start out at 0.006 cents a share. 0.006. If you do not put in more money, you're going to be diluted further. But I think it's important to know right now what the update is on GTII. So how can I summarize this to you, J-Town? This is how I summarize it to you. It doesn't matter. You have lost everything. And you've also lost the chance to lock in your tax losses. Number one. Number two, because of the hard work of a lawyer I'd forget the name of out of Arizona, the receiver, Paul Strickland, and the hard work of Not Legal Advice, Richard Hoffman, and because of the enthusiasm and the excitement of the new CEO of AIversity and whomever is backing them. And don't forget, because whales are supporting the cost of this process, GTII does have the potential to survive receivership. I still give it a flip of the coin. I think the judge will be inclined to deny letting we as shareholders survive. But I'm not a lawyer. So let's assume we get through that. So what I think is already essentially worthless, except that good people that I just listed are fighting hard and with integrity and honesty to make right a wrong against these criminals, will be alive to fight another day. Now that puts us in the new situation. Does AIversity come in fully capitalized and not need any money over the next year? I don't know the answer to that. My guess is that's not the case, but it could be. Could be. What is more likely is AIversity is going to need capital. So then you have to ask yourself, what is that capital going to demand? Start with AIversity brings the goods. The capital brings the investment. I'd start at 50-50. So our 15% will go to 7.5% and go from there. Now, J-Town, you can hear in my explanation that I essentially think GTII is worthless. Out of the kindness of the new company and the whales, they may finance GTII such that we are left with a big upside. But even in that situation, you will be asking a new company, AIversity, to replicate the performance of the best companies you've ever heard of in order for you to make your money back. If 0.06 goes up 25 times, it's 15 cents. I think I'm doing that correctly. But my point is, whatever you and I start out with, it's going to be so de minimis as a percentage ownership of GTII to be essentially worthless. The only way, and this is going to be my final comment, and I'm going to resist every urge to hang up on this call. The only time for you to ask me for an update again is when the new CEO who I understand is a good man, the whales, come to us and ask us, and they may not need us, they may just do it as a favor, but they ask us, here's the new financing. Do you want to participate? At that time, I can add value because I can study the financials. I can use my experience to talk about valuation and projections and all that. Until that time, the only people that can add value to your question are the attorneys. And I counsel you that attorneys are trained to right wrongs in legal. I don't know the term. I'm not a lawyer, but attorneys are not trained to look at a situation and imagine what can be. Attorneys are burdened by the past. Attorneys only look at what's on the black and white of the paper. Reichman stole this. Reichman defrauded there, and so on. Let's claw back those shares. Let's claw back that money. And let's get this through receivership so the shell has a hope to be a vehicle for some reason that AIversity wants. If that happens, bring it to me then. And maybe we'll find out then if the whales want to give for free upside to us that we don't pay for. Let's find out if AIversity wants to give to us for free because we're good guys. Upside. I doubt it. With that, I'm going to stop my update on GTII. And I am going to end this call.